Hey, thanks for tuning in. In this video, we're going to do a weekend review for the week ending January 14th, 2022. Looking at a chart of the S&P 500. This is the weekly chart. We've got a doji at the 20 and a close below SMA 10 and EMA 5. Yet we're still at the middle of this ascending channel that price has been in since the summer of 2020. There's three things that we're going to talk about in this video. First and foremost, the non-confirmation continues. This is something that I've been discussing and highlighting for approximately 3 months now. As SPY continues to grind higher, the participation is less and less. And one of the tenets of Dow theory is that the move higher in the major indexes, you want to see that move higher in all the major indexes, the top 500 being the S&P 500, and the bottom 2,000 being IWM and IYT for the transports. Second thing we're going to look at is range bound versus trending markets. Which markets are trending? Which ones are range bound? What does this mean for the probability of price exploration? And the third thing we're going to discuss is the fundamentals, which everyone loves to ignore. And that's the interest rates and whether or not inflation is here to stay. Has inflation peaked? Is the CPI PPI print what we needed for that to happen, or is this a trend? And inflation is going to continue to rise and rates are breaking out. So that's what we're going to talk about in the third one, and just how that applies to the Fed and poker. They've made this claim that they're going to raise rates. Every single Fed person has talked about it. Every big bank has talked about it. My babysitter knows about inflation. I think they did a good job of letting everyone know what it is and how to fix it. That being said, all the algos are configured now to buy things that are positively correlated to rising rates. Well, we've seen that. That's already happened. So does that mean that regardless of what happens in March, it's a sell the news event? That's what I'm thinking. So let's take a look at the SPY. We got a doji. We're sitting at the 20. You can't really tell much. I will say, though, on SPY, unlike some of the other indexes, to start the year, you had an outside bearish reversal. The close of the first week of the year was at 466.09. The close of last week is 464.72. So this low is 464.65. 464.72. So closed inside by 5 cents, just to be clear. So in order to, and the reason it's important, in order to confirm this outside bearish reversal, you need to close below the low in the following week. And if you don't do that, it's negated. If you do that, we anticipate 3 weeks to 6 weeks of down or sideways in the bearish case, or up to sideways in the bullish reversal case. Following that candle. So we did not get that. I will point out that this PPO is pretty coiled, and we do have a bearish divergence on this low here, which is also when we got the non-confirmation. So just pointing out that you have a hidden bearish divergence, a higher low in price and a lower low in momentum. What I see is this momentum resetting to zero, and I think it wants to come all the way back down to here. That's my guess, or at least the zero line. And in doing so, we'll come back down to the 40, and who knows how low. Looking at the daily, because they negated that outside bearish reversal on the weekly, you got to zoom in and start to take a look at the picture here. And it's pretty unclear. I mean, you could have a 5-wave move that looks like this, or the 5-wave move that I was just showing you. It doesn't really matter. And then this would be more of your weekly ABC, something like that, a running flat. Or your wave 5 ends up here. and we're looking at, there's your ABC, ended at the 618 extension. We didn't break the low of the A leg. You don't have to. Either way, ignore all the Elliott wave for a minute. This is a trend line. We're above it. As long as we stay above this trend line, there's no problem. We break below this trend line. We break below this gap at 455. If you find yourself below 451 or even 450, any of these levels here, c'est la vie. And it's not the 20. It's the non-confirmation low from October. And that's about 426. And it'll come in a hurry. It'll come real quick. All right, so let's move on to the Qs and just keep in mind those same exact ideas. So S&P is trending still, but also kind of hit. Let's just talk about this for a second. So going back to August, price has appreciated about 1%. Okay, so you could argue that yes, this is still in a series of higher lows and higher highs. It is, right? The higher low here at 451. As long as they hold that, no problem. But if you look at the high here of 454 from August 30th, I mean, price has not done much. All right, now keeping that theme, right? Are we still exploring higher prices? Yes, we are. Are we doing that on QQQs? No, we're not. QQQs already put in a lower high and a lower low. And in doing so, that's what's unlocked buyers, right? If you notice, like, you're not going to find buyers until that happens. And I know it's counterintuitive, but that's what completes the flat. That's what they're looking for. That's where all the stops will be. One thing I like about the Qs here, A, we're still in this ascending channel. B, we are starting to get this structure look a little bit more complete. You know, your standard maybe flat here. And we're at a rising 40. But I will say, here was PPO at you know, back in August was at 7, and now it's down here at 2. Right? And we haven't touched the bottom of the channel, so if we want to keep in mind with, hey, what's the worst case scenario across the board? It's the October lows. It's the non-confirmation lows. That entire move up was not confirmed by IYT and IWM. And when we get to those charts, I'll highlight exactly what it is I'm talking about. That being said, downsides around 350. The low last week was 369. So we're getting close to the low, in my opinion. But what ends up happening is you could end up finding yourself with a little left shoulder head, put in a right shoulder. And then by that this time, it'll be around April, and you'll be at the bottom of the channel. Then everyone will be looking at the same chart saying, hey, look, it's a head and shoulders, but no one will be looking at the ascending channel. So yeah, it's one of those things. Either way, we're getting a lot of volatility, and I don't like the look of this yet. Now, it could have put in a bottom, and we do have the momentum divergence here, so this wave could still be going on. What we do have definitively is something like this, and maybe I counted that wrong and it starts here, right? Doesn't really matter. I'm just trying to point out how many like definitive zigzag ABCs do we have. Right. So is this your wave 1? This could still be all of wave 3, and we're putting in a wave 4, and we'll come up back here for one more wave 5. That is kind of what I see. All right. And the highest PPO here confirms that, wave 3 of 3. So that's what you want to see. But what you do want to see is this divergence held, and ideally, if that happens, you want to buy dips against 369.31. That's where we are on the daily. And that kind of happened on Friday. But you can't forget you're still below this. We have already come back into this channel. What I would like to see is a definitive close below the 200. Weakness to start the week. Let it fall into one of these levels. 360, 367, and the 200. That's fine. Spike below it. Close below it. Whatever. All the same. And then go sideways like we did here. 5-6 sessions. Okay, 5-6 sessions. This one kind of V-shaped. So maybe that is what you'll get. But I'm looking for a correction into one of these levels. And I put up the fib here. A wave 4 generally does not correct more than 50%. So if this is wave 4, you're generally only going to get a 38% retracement, at best 50%, and at least 15%. I've seen those. So we're there. It could have already completed. We do see the structure for this to completed. This could be a wave 1, wave 2, winding up to go back and challenge the highs. It's hard for me to tell. I have no position. So until she gets above a declining EMA 5 and a declining SMA 10, we're not going to get anything that looks like this. Okay, you see right here, even right here, when SMA 10 curled up and price was 369, you could have still done nothing until what? Until at minimum the 20, and you're out at 400 almost. Okay, and that's just playing the daily without guessing. You don't need to guess, and it did it here too. See right here? Look at this big run. Okay, you think you're going to miss a run? Wait for it to capture EMA 5. We'll look at SMH. Similar story here. So outside bearish reversal was in play only for SPY. Okay, look here. Oh, SPY and SMH. SMH came into a rising weekly 20, found demand. You can see it in the volume, closed inside. So this outside bearish reversal is not confirmed. But the reality is, look, range bound since November. This is not a market to trade. Like, what are you doing over here? I'm a swing trader. This is not a swing trade environment anymore. It was here, and it will be if it can get above 320. But until then, the assumption is what? What do you think? Look at the daily. Look at all this fucking volume. Excuse my language. It's incredible, right? This is either distribution or they are going to break above, and it will be some wave 3, right? I don't know. We have the structure for a 5-wave move. We have the structure for an ABC or a WXY, okay? So it's entirely possible something like this is about to happen. Why not? But until you get above this level here, that one right there, 314.82. Until you get above that level right there, you're not going anywhere. And so if you come into Monday, that's 2% up, 6% down. That's negative 3.1 risk reward for anyone who owns SMH on Monday. Negative risk reward. So it's a sell to start the week. I don't know what else to tell you. And finally, the IWM and IYTs. Okay, and we'll start here on the weekly. Outside bearish reversal candle. All right, on January 3rd. The low was 215.82. The close of this past week is 214.31. That's it. Confirmed. Outside bearish reversal confirmed on IWM. All right. And from these fake out moves come the best moves in the downside. All right. So the way I see this is a look above and fail. And what we are trying to do is identify where a potential area of support could be, given how she's now pretty much gone straight down for 7 weeks. And there's a few ways that we can do this. You know, maybe it's something like this. And we have ourselves an expanding range. I don't really know. I don't really care. What we want to see is like this rising moving average might supply demand. But the reality is, this is demand. The shelf that's down here. And you can even see it in the volume profile. It's like down here at 152 and maybe 170. And before that, all they did is go straight up. So you hear it all the time. pump, distribute, dump. That's what's coming, in my opinion. The PPO confirms that. The PPO is negative now for 2 weeks in a row. It continues to accelerate lower. And from where I sit, you know, below 209, below 207, below 203. I mean, we can zoom out to the monthly and say, hey, look, there's a rising 20 here at 200, right? Okay, maybe they're just coming to tag a rising 20 on the monthly. But look, this is what happened last time they captured it. They never touched it. It comes right into it, and they go lower. I don't see why that can't happen. You know, so, and again, I'm not a weekly trader. I'm not doing that. This is short on every time frame. For me, this is a short. And when you zoom into the daily, guess what? Another short setup is coming. I mean, I love these setups. If they were for long, right? Because I generally just trade longs. This is a perfect setup, and if you go over to TZA, I bet you it looks like a great little long setup. Exactly. I mean, look at this cup and handle that we look at all the time. We're getting close, right? We don't have it yet. It's definitely not a breakout yet, but, and look at all this volume. You know, so, and we do have a divergence here, so it's possible that this continues, and they don't actually, they just set one more high, right? If it is that expanding thing that we were talking about, maybe they come up here and tag this, and then head all the way back down. Who knows? Either way, IWM is a nice short setup, SMH, a nice sell setup, QQQs could go either way. And SPY is likely to just keep going sideways. But remember, the non-confirmation I was talking about is this move here from beginning of October, 217 to 244. We're below the October lows on IWM. Okay. Is any other major index like that? The October lows, 250 on SMH. The October lows, 427 and 460. The October lows, just keep this theme, guys and girls. 350, 375 to 380. We're not there yet. So what is going on? Why is IWM falling out of bed? It is now becoming a very, very obvious weekly zigzag. At minimum, a weekly zigzag. I mean, forget all these fibs for a second, okay? This is your potential look below and fail target right here. All right, so you got 200 to 210. That's the last line in the sand for a bull. I'd be willing to take a trade at 200. But check this out. 1, 2, 3, 4. 1, 2. We probably have 2 more weeks before this is done. And that's just where I sit. And most of the time, you know, people ignore the fundamentals. And if you've been following me for any time, I've been talking about this rates thing for a minute. We're going to find out real soon. That's a doji at the 200 on the weekly. Bearish divergence, definitely in play. But what I see here, 61% retrace complete. So what does that mean? We use the extension tool now to give ourselves some targets. And I mean, these rates aren't done going up. Right? Even if this is an ABC up, okay, well, it's got 19 or 203. If this, and that would just be if it was an ABC, something like this. Corrective within the context of a downtrend. But if it's impulsive, it's 2.25 at minimum. And if you look at this on the monthly, Have we broken any long-term trend yet? No. No. Not in my opinion. All right. We're still just retracing this down move. The 320 to 30 cents. Okay, we're just retracing that move. And everyone wants to think that it's the end of the world. Look at that, 215. That could be a target. But yeah, what this implies is that, in keeping with the theme of the Fed and poker, what it implies is they don't even have to raise rates. The market's pricing it in. They did exactly what they wanted. They're winning. People say that you've lost, faith in the Fed. You might have. I have, sure. But what they're doing is effectively working. And that is objectively true. And what they wanted to do was halt inflation. That has yet to happen. And I think that's the part of the Fed has lost faith. But when it comes to raising rates, well, they haven't even changed rates yet. And the 10-year is acting as if this is a historic low. So, there's some games going on. There are fundamentals at play, and you can't ignore them. That being said, let's take a look at a couple more ETFs and wrap this up. ARK ETF. 1, 2, 3, 4. 1, 2, 3. Next month. That's kind of how I see it. For a couple reasons. Let's get some symmetry. We haven't hit 70 yet. Now, maybe this, simple moving average 40 is all she needs. Wow, that's crazy. There's no way that was it then. Okay. Maybe that's all she needs, but I like to see these fibs also terminate. Here's another thing to watch. Are you going to get a bearish divergence? I mean, this histogram shows that the bears are winning, and they're winning more and more every month. This looks like full-blown distribution to me. This looks like blow off top, right? We'll see. Here's the technicals, and this is where Elliott wave is a bit rough at times. Even from this pivot here at $97, the invalidation level was $60. Okay, so this is the wave 1 high, or whatever you want to call it. That's the pivot level that matters, $60, and we're still at 80. And when you look at the weekly, we don't have a weekly reversal. We don't. We're close to a fib level. We're close, but we're not there yet. And we don't have a daily reversal. So everyone here wants to call the low on ARK, and by all means, call it. You've been trying to call it for weeks, and you've been failing. You've made no money calling bottoms on ARK. I don't care if you got the trade from $90 to $100. I don't care. This is the trade that you should have been looking for. All right? So when we get a bottom, and trust me, there will be a bottom in this name in the next 2 weeks. We're close. The psychology is there. No one wants to own ARK. Everyone's making fun of it. Tim Dillon posted a meme about Cathie Wood losing money. It's done. I mean, he nailed the top in Clubhouse. He's nailing the bottom in ARK right now. But we don't have the technicals to justify it yet. And honestly, it might align with the March rate decision. That could be the timeline here. And the market could be doing a bunch of sideways to nothing for 2 more months until that decision is made. I don't trade based off of news. It's just an awareness. I'm waiting for price to get above this EMA 5. And look, couldn't do it here. That wasn't the time to buy either. So we don't have a single time frame that is long. I want to show everyone this here. Yet you go on Twitter and there's the contrarian view is, oh, ARK is bottomed. It's in. The bottom's in. Can't wait till you see it next week. Bottom's in. Okay, I don't see a bottom anywhere. I don't see a bottom on the hourly chart. I don't see a bottom on the daily. I don't see a bottom anywhere. Right? I see a top. And I see a falling knife on the monthly. Every single time frame is red. It is down. And until you get a monthly pivot on volume, We're not going to get a 3-wave move higher. Something like this. That's what we're looking for. A 3-wave move higher before you get basically what we just saw again. You're looking for a 3-wave move higher on the weekly at minimum. We haven't had a 3-wave move higher on the weekly. And this volume here is telling me that capitulation is close. I mean, if you look at the highs, this was the volume. And now we've got similar volume, a lot lower. But the point of this ARK chart is we don't have a bottom. KWEB, another interesting one. Actually, one of the leaders on the year right now. China is definitely beating US right now this year. Look at all this volume at the POC. As soon as price hit the POC, look at all the volume that came in. Okay, so there's a lot of value in these volume profile charts. And it didn't mean, hey, this is where they're going to bounce from. No, it meant this is where they were willing to participate. That's what it meant. You see how there was no participation up here? Right. Because that was all retail and that was a trap. This was them participating. And they'll still participate the lower we go. There's a gap down here at 31. Weekly can't get above EMA 5. That's a problem. Daily is a very interesting setup. And this is what I'm playing for now. Because this daily could certainly morph into a weekly reversal. We have a break of the downtrend. Step 1, we broke a declining trend line. Very good. Step 2, captured EMA 5, captured SMA 10. Good. Captured a declining SMA 20. Good. Step 3, is EMA 5, SMA 10, are they sloping up? EMA 5 is, SMA 10 is not. So we're not there yet. Okay? And what might end up happening is more sideways action, allow the 40 to come down a little bit lower, and then price captures. And the PPO is showing all of this as well. It's curling up and accelerating higher. The histogram is above 0, which is what you want to see for any of these type of rallies. And this to me is a bullish Harami reversal. So you have this gap down. What type of gap is this? Right? Because you have the same thing here where they just gap it down and then they let it run. They gap it down. They let it run. Right? This is kind of the MO for this. Yeah, so are they done with that? And what I find very interesting, right? 37.12, 37.21. Okay. So just like IWM didn't close inside last week's candle, KWEB closed above the 20. I find that very important. If this is going to be some rally here, we need to capture the 20 and we need to curl up, which is what we're looking for. Looking to find sellers at 38.87. This gap looks like a common gap. We don't have any abnormal volume. If anything, it could be an exhaustion gap. We are at a pretty extended downtrend. And really all we're looking for in any of this rally here is just a challenge of the POC between $47 and $50. So my entry here is at 36. I'm willing to allow it to come to 35.19. That's about it. Anything below that, I am all out. And you know, I'm gonna ideally have this for 3 to 9 weeks. Yeah, so we've covered China, we've covered growth, we haven't covered gold or Bitcoin. Just go to the high time frame for these. We still have a potential cup and handle on gold, but I'm just not seeing it. You know, we got it like until above 174 over here. It's a big nothing. And let's take a look at Bitcoin. Below the 10, monthly PPOs are accelerating. This to me looks like she's topped. I'm until 28, 29, and then we'll see what happens. We'll see what she's made of. And quite frankly, this could triangle for a while. This could literally symmetrical triangle. I mean, I know we've expanded, so maybe expanding triangle, it doesn't really matter, right? But just stay within this range and get tighter and tighter on declining volume. That is what I see happening. And the range is very, very obvious now, right? It's this 30K to 65K. And if you look at the weekly PPO is breaking down, neg 237, neg 84. So very, very close to breaking this divergence. If they can't rally here, they're going to come down and test neg 18. And that will likely align with this 30K thing that we've been talking about. The longer they wait, the better, because the way I view this is let the 200 on the weekly come up. The 200 on the weekly is where rallies start. Just look at this, okay? Right? This is where the rallies start. Right? We haven't hit it yet. So I'm not ready to go, heavy into Bitcoin yet. I'm just not. Yeah, so that kind of wraps up the video. If you like the content, hit the subscribe button, hit the like video, and we'll see you in the next video.